All right, three things in 3 minutes. Let's get it. So, consumer sentiment has taken a nosedive over the last 4 months. This is the measurement of how people feel about their current financial position, the health of the economy, and prospects for longer term economic growth. Don't ignore it, address it. It's a winning issue for a true advisor. So, let me give you a little bit of a story. When rates doubled in 2022, I spent the first 6 months not talking about rates having doubled. But then I realized I needed to. I had clients who were freaking out and worse, looking to back out of deals that they had already agreed to. So I instituted my Preapproval Success Call, and it's been a huge win. Rates were the thing that clients were worried about. So now it's the first thing that I talk about when I'm doing the Preapproval Success Call to make sure that clients understand how they're determined, how they move, how we can help them negotiate lower rates, and when they can refinance their rate. So, if you don't think that this helps me stand out when buyers are quote unquote interviewing multiple lenders, you're crazy. It builds ridiculous amounts of trust and authority, and it provides clarity so that buyers can determine if they should be moving forward. And it kind of allows me to persuade them, not persuade, persuade them that I'm the right person to help them navigate a high rate environment. So for agents, if you're able to do the research and be able to show them things like, one, how real estate responds in uncertain markets, two, what wealth creation might look like for someone who bought the last time consumer sentiment was this low, three, what they can do to protect themselves from volatility, and four, how you, specifically you, can help them navigate these uncertain times through your ability to help them negotiate the best possible terms, not just in general, but explaining to them where they might be able to use leverage to start with a lower rate or get credits towards closing or negotiate a lower price. These are the things that buyers are looking for. So it's during these more complex times that a real advisor, a true professional, is able to show their value. Make that be you. While I love real estate for wealth accumulation and preservation, there's one thing that I'm kind of worried about right now. So, quick reminder, stocks and bonds typically fight for the same investment dollar. So, usually when the market is turbulent, money flows out of stocks and into the safety of bonds. When investors sell off stocks in times of crisis, they pile into US treasuries, those are bonds, seeking the safety of an asset that's backed by the full faith and credit of the US government. Yet, as stocks have declined recently, investors have also sold off US Treasury bonds. This raises a question. Why do market dynamics appear to be changing from the decades-long rules that we've had? In fact, this sell-off in bonds was so unsettling that it actually spooked the White House into reversing most of the non-China tariffs last week. So, there are three hypotheses for what's going on, and honestly, none of them are good. One, investors had to sell bonds to deal with covering the losses that accumulated during the rapid decline in the stock market. Not good. Two, China, the EU, Japan are kind of working together to punish the Trump administration for tariffs. Not good. Three, just in general, investors are worried about the ability of the US government to pay its debts amid concerns about future economic growth and health. Really not good. So, none of these are good. And it's possible that this is all just normal reshuffling, but the fact that the bond market is not moving like it traditionally does is something that is worrying me and candidly others. All right, so just where our rates, real quick. After seeing rates dip to about 6.5% for a 30-year fix nationally just 10 days ago, they're back up above 7%. This is the volatility. These are the wild times. This is when you need to remain calm, zoom out, and provide some clarity to your clients, all right? Y'all got this.